Welcome to your daily market wrap. We're going to cut right through the noise and show you what's really driving the markets, from all the geopolitical drama to the key technical levels you absolutely need on your radar. So let's dive right in with this quote. This is a stark warning about supply chains, and it really sets the tone for a market that is, pretty on edge. We're not talking about small hiccups here. We're talking about huge potential shocks that could ripple through everything from inflation to growth. First up, let's talk about the biggest theme playing out right now, geopolitical pressure. It feels like we're in this pressure cooker. It's not about all-out war, but this kind of subtle, slow-burn economic warfare and strategic signaling that's keeping everyone guessing. I mean, just look at the Middle East. It's a classic will they, won't they situation. Iran is sending all these mixed signals about negotiations, while the U.S. is holding a really firm line on its blockade. So diplomacy isn't dead, but man, it is hanging by a thread. And this tension, it isn't just isolated to one spot. We're seeing this pattern all over the globe. You've got Ukraine hitting Russia's critical oil infrastructure. You have China using this mix of military pressure and political talks with Taiwan. The playbook right now seems to be this slow, grinding geopolitical squeeze. So the big question is, how is all this uncertainty actually hitting the markets? Let's take a quick pulse check around the globe. Well, oil markets are hanging on every single headline. Brent crude actually flirted with that $95 mark before pulling back just a little on some hope for de-escalation. It's a perfect sign of just how sensitive energy prices are to this stuff right now. Over in U.S. equities, the feeling is more caution than actual panic. We're seeing these small pullbacks as traders try to figure out what to do. The market just can't seem to make up its mind on whether to take on risk or run for cover. And of course, there's gold. It's always a great barometer for fear. It's holding strong at these high levels, and it perfectly captures this conflict in the market, right? People want a safe place to hide, but they're also worried about what the central banks are going to do. All right, let's shift our focus over to India. The story here is one of resilience, at least on the surface. But if you look just a little closer, you can definitely see some signs of strain under the hood. I mean, at first glance, it looks like a boring, flat day. The Sensex and Nifty barely budged. But that's not the real story. Look at the weakening rupee and the nervous bond markets. That tells you these global jitters are absolutely starting to have an impact. Okay, let's get into the good stuff, the technicals. We're going to break down the key support and resistance levels you need to have on your charts for today's session, starting with the big currency pairs. For the dollar index, the DXY, which, tracks the dollar against other big currencies, the strategy is still looking like sell on a rise. And now there's this new layer of uncertainty from all the political drama around the Fed's leadership in Washington, which is just adding to the pressure. So here are the levels to watch. You've got support down at 97.53. Your first hurdle on the upside is 98.17, with a stronger ceiling near 98.64. Any rallies up toward those resistance levels might be seen as a chance to sell. Now for the euro, yesterday's German producer price data was a real shocker. And it's a game changer. It's just pouring more fuel on that inflation fire, putting more pressure on the European Central Bank. This really reinforces a buy-on-dip strategy for a lot of traders. So keep a close eye on that support level at 1.1730. It's been tested, and it's held up so far. If it keeps holding, the upside targets are 1.1783 and then all the way up to 1.1830. Okay, moving on to the British pound. UK economic data is, well, it's famous for being unpredictable. Today's labor report could totally deliver a surprise on wage growth, which suggests that any dip in the currency might be a good buying opportunity. And for sterling, your key support is sitting around 1.3450. On the upside, traders are going to be watching for a break above resistance at 1.3558. If that happens, it could open the door to that recent high of 1.3600. Now, the Japanese yen is in a really, really tough spot. The chances of the Bank of Japan hiking rates have just collapsed because of all this geopolitical uncertainty. But at the same time, the country is super exposed to energy inflation. It's a total policy trap, making this a clear no-trade zone for now. And the technical chart just screams this uncertainty, right? You've got this wide, choppy range between support near 158.35 and resistance around 159.77. It suggests there's no clear direction, so it's probably smart to just stay on the sidelines. Turning to the Indian rupee, that slow slide against the dollar is continuing. And the main reason is pretty clear. The renewed tension in the Middle East is the fundamental anchor that's really weighing on the currency. This is what's making any dip in the USD/INR pair look attractive to buyers. You can see the pair is trading in this really well-defined rising channel. Key support is going to be found between 92.80 and 92.90, with your upside resistance targets at 93.40 and then 93.66. And finally, let's look at the Nifty. Now, this is interesting. Despite all the global noise, the internal health of the Indian market was actually really strong. We saw more stocks going up than going down, and that positive market breadth suggests that investors are still buying on the dips. So these are the key zones for navigating today's session. You've got a solid cluster of support levels just below where the market is now, while the next hurdles to clear on the upside are at 24,399 and 24,512. All right, to wrap things up, let's take a quick look at the economic calendar. These are the key data releases that have the potential to move all the markets we've just been talking about. You'll want to keep a really close eye on these. We're going to get clues on wage pressure from the UK labor data and investor confidence from Germany. But let's be honest, the main event is in the US. Retail sales and jobs data will give us a super important read on the health of the American consumer. So we end on the big question that every investor is asking right now. You've got these two huge forces, geopolitics and inflation, pulling the market in opposite directions. Which one is finally going to be strong enough to break the stalemate and dictate the market's next big move?